Welcome to Capital Insights. Thanks so much for being with us. It's a bit of an understatement to say that we started the year with a little bit of volatility in the financial markets. Plenty to worry about, right? Increasing Mideast tensions, we've got economic slowing in China, further currency devaluation to come. It's a pretty darn good bet right here that the U.S. manufacturing sector is in recession. Earnings are starting to be a little bit of a question mark. Will the Fed raise rates again one more time? And some of the financial system in Europe is starting to show some more strains. But this time, it's moving to some of the countries like Italy and probably to France pretty soon. Those are going to be on the front page before this year is over. There's always something to worry about. And that's a little bit of the reason we've had some volatility. But we also need to remember that this bull market that we're living in the stock market, is no young bull by any means. This is the third longest bull market in the history of the United States. And what markets do is they inhale and they exhale. They never go up in straight lines. They breathe. One of the big questions on a lot of investors' minds right now is, are we going into a bear market? Well, I'm here to tell you today that we are already in a bear market. You just have to dig a little bit deeper in the market to take a look. If we look at things like the value line index that has 1,675 stocks in it, if we look at the Japanese Nikkei, if we look at the Euro Stoxx 600, which is the largest 600 stocks in Europe, if we look at the U.S. Transport Index, if we look at the Russell 2000 Small Cap Index, if we look at the S&P Mid Cap Index, if we look at energy, every single one of these indices or sectors is down between 20 and 25% since the summertime of last year. And on Wall Street, the convention, if you will, of a bear market, or a characterization of a bear market, is something that drops more than 20% in value. All of these things are down more than 20% in value. So if you own them, you're in a bear market. It's just that the mainline indices, the headline indices, and we discussed this last month when we talked about looking at the Dow and the S&P, they haven't gone in yet. So in one sense, a lot of damage has already been done underneath the major headline indices here. And I thought today I'd talk very quickly about volatility, how we handle volatility, and how hopefully we can use it to our best advantage over time. It's never fun, and we always wish that when volatility increases, we didn't have anything invested in the markets. But that's not what long-term investing is really all about. So it's periods like this where I think it's really important to kind of step back, try to eliminate the emotions from our thinking, and to a point, try to turn what's happening on its head. Yes, we know there's volatility, but from a longer term perspective, volatility is what creates tomorrow's investment opportunities. Again, I know that sounds like a toss-away comment, but we've seen some things in this market over the last year or so that are starting to tell us some of tomorrow's very important investment opportunities are being born today. It's tough to see it amid all the emotion and the fear that volatility induces, right? One sector that I just wanted to highlight today very briefly, and it's conceptual thinking more than not. Remember, when prices go down, that's an opportunity. When they go straight up day after day after day, they get more expensive. So we kind of need to reconfigure our thinking when they go down and look for those opportunities. And one sector that I wanted to talk about, and trust me, are we piling into this right now? Absolutely not. But we think we're headed toward potentially a once-in-a-decade opportunity before this little mini cycle plays out, and that's in energy. We all know the price of oil over the last year and a half has dropped from $100 a barrel all the way down to 50. It broke through 40. It went through 30. In fact, on a year-to-date basis in 2016, the price of oil is down 30%. That's in less than 15 trading days. How many times do assets fall 30% in 15 days? And the answer is very, very infrequently. And we've seen incredible devastation done to the energy sector and the energy stocks over the last year and a half. That's where some opportunity is being born. Right now, some of the dynamics are that the Saudi Arabians are keeping their production of oil intact, if not taking it up a little bit. What they really want to do is protect their market share relative to this burgeoning U.S. energy industry that's grown up over time and acts as competition for them. Russia, having a very tough time economically. In fact, as we're filming this, literally last night, the Russian ruble had one of its largest down days relative to foreign currencies of the last X years. And Russia's pumping more oil. And in the United States, the dynamics, even though the prices have dropped like a rock, is that we've got a lot of domestic energy companies who are producing full out. Why? Because they're making a lot of money? Absolutely not. They're losing money on every barrel they pump. What they need to do is pay off their debt because they finance themselves in the high yield bond markets. So we've got a once in probably a decade period where a lot of anomalies have driven an asset price down very, very, very significantly. And very quickly, right now, we've got about 1 million barrels a day of excess production globally in terms of crude oil. We need to remember that over the last 5 years, the domestic energy industry added 5 million barrels to daily production because of what happened in the Bakken, what happened in the Eagle Ford, etc. And virtually all of those areas right now are unprofitable at $30 oil and below $30 oil. As we look globally too, close to 75% of the entire oil industry right now is unprofitable at current prices. How sustainable is that? There's a crazy old saying on Wall Street, and the saying is, when every company in an essential sector looks like it's going out of business, you should buy every company, because they can't go out of business. And this too shall change. So are we piling into energy assets these days? Absolutely not. But we think we're coming to, probably this year, a once-in-a-decade chance to buy these at incredibly inexpensive prices. Are there more pain to come? Absolutely. Is there a recovery dead ahead? We can't see one, but there will be over the next few years. It's all part of cycles and how they work out over time. So we just wanted to leave you with a little bit of a thinking that, in today's world where volatility goes up, we need to turn that thinking on its head a little bit, think a little bit longer term, eliminate some of that human emotion and fear it's part of all of us, and look at opportunities that are being created for tomorrow. How do we invest in those over time? Slowly, carefully, and with patience, exactly as we invest all other investment monies. So hopefully this is a quick little set of comments that's relatively helpful amidst the increasing chaos, the increasing cacophony, if you will, of media, breaking news and the markets, etc. This is what opportunities are all about. We'll have a lot more to say as the year goes on. So just remember, for those who have a little bit of dry powder and a little bit of cash, today's volatility is absolutely tomorrow's opportunities. We very much appreciate your time in being with us. Thanks so much, and we'll see you very soon. On behalf of the entire team at Capital Planning Advisors, many thanks for the graciousness of your being with us today.